Okay, guys, I hope you all are doing well. Thank you very much for joining in again. So we are going to continue discussing about the past examination question papers of the ACCA Advanced Performance Management. And we did one of the past examination questions in our previous session. Today we are going to go about discussing another examination question. And we would see that how different questions need to be handled in the examination scenario. So basically, I'm going to Okay, what I have actually done is that I've opened up the CB practice platform, and on the CB practice platform, I've actually opened up the recent attempt examination because we did this question in the previous class. So what I will do is that I will actually move on to question number 3. Okay, with respect to question number 3, it is basically one of the questions where what you have to do is that you have to talk about some budgeted information, where you have to talk about some other things also. So let's actually have a discussion on this question. It says the following exhibits available on the left hand side of the screen provide information relevant to the question. So there is this company information that is given, the background and organizational structure of the company, Ruard Cleaning. Then there is this some budget information which is given, and then some divisional performance which is being shared. Then appendix 1 is there. There are requirements to the question which says respond to the CEO's request to work on the following areas: budgeted information and the divisional performance. So you have to respond to the CEO's requirement to actually uh, perform the work on the following areas. What are the areas? Budgeted information and the divisional performance. Right? Okay. Now what next is there? So this is what the requirement of the question. Let's talk about the company information. Then we talk about each one of them, the budgets and all that. So can you just try to read through this company information and see what are the important things that you can highlight in here? Okay, so it says Ruard Cleaning is a business operating primarily in Thailand, which provides cleaning services for other businesses. The business is owned partly by Ruard family and partly by venture capital firm. So the business is basically operating in Thailand and it provides cleaning services for other businesses. Um, Partly by venture capital firm who helped the Ruard family buy out the business a number of years ago. Both the Ruard family and the VC expect to see regular returns from the business. That's very important that both of them want to see regular returns from the business. Now, what next is there? It says Ruard has three operating divisions. What are the three operating divisions? Let's see. One of them is office cleaning. It says which provides general cleaning services for organizations that outsource this function. It operates in a highly competitive market and consequently price sensitive market, and office aims to be cost leader. So you see there is a division which aims to be the cost leader because it's operating in a market which is basically highly competitive. Industrial site cleaning, which provides a more technical service to business that handle dangerous materials. Industrial has built a strong reputation. There is a strong reputation for handling these situations where there are many safety regulations and the need for specialist equipment and technical knowledge. Therefore, industrial has differentiated itself from its competition and enjoys strong gross profit margins. So enjoys strong gross profit margins. Then it says specialist waste disposal, which has grown out of the need in the industrial division to provide clients with a solution to the problem of disposing of contaminated material that can no longer be cleaned and put back into use. Therefore, similar to industrial, disposal has differentiated itself from its competition. Disposal is now focused on growth by expanding into the operations into other countries. So they are actually into the waste disposal, especially the industrial waste disposal of the contaminated equipments and materials and all that. Now, what next is there? So this is some information about the company that we have now got. Now let's just try to see this. Then we talk about the budgeted information. So can you actually go through this budget information? Can you go through it quickly? Okay, now let's see. It says the Chief Executive Officer of Ruard has recently completed a short postgraduate business qualifications where she heard about different corporate strategies and management styles. So she has actually heard about the different corporate strategies and the management styles. Now what next is there? Now it says that the first part, the CEO wants to discuss these ideas with Ruard's board in relation to the use of budgeted information at Ruard and has broken the work into two parts. The first part of the work is about these business ideas generally. The first part is about these business ideas generally. CEO would like a brief outline of the Hopwood's styles of using budgeted information. That is the budget constraint, profit conscious, and non accounting style in evaluating divisional performance, managers' performance, and how these fit to Porter's strategy of differentiation and cost leadership given for the division. The first part of work is about these business ideas generally. CEO would like a brief outline of Hopwood's styles of using budget information. The second part of the work is to focus on the specific situation at Reward. To focus on the specific situation at Reward, where the current strategic control method is to evaluate divisional managers' performance solely on their ability to achieve their budgets on a quarterly basis. The CEO requires you to evaluate the current approach to use of the budget information at Reward and give justified recommendation for what you believe is the best approach to use the budgeted information, so and so, so and so. Now, what do we have in here? There's this divisional performance also, and there's this appendix one also to support the divisional performance. So I'll just first of all get into this budgeted information and try to see what we can do with respect to this answer. Now, what does he want? The CEO would need a brief outline of Hopwood's style of budgeted information in evaluating divisional manager performance and how these fit and how these fit into Porter's strategy given for the divisions. Okay. Next is basically the second part is to focus on the specific situation at Reward, where the current strategic control method is to evaluate divisional manager performance solely on their ability to achieve their budgets on a quarterly basis. CEO requires you to evaluate the current approach to the use of budget information at Reward and to give justified recommendation for what you believe is the best approach to use of budget information at each division. So the examiner has actually given you the question and he has explained to you what is he expecting from you. He has explained to you what is he expecting from you, right? Okay. So would you like to give it a try? Would you like to give it a try, please? All of you, would you like to give it a try, please? Yeah, can you think of something about it? Okay, let's just try to discuss this, that how exactly are we going to answer this question. Now, there is actually going to be an approach which you would do. The first thing is that you would actually have to discuss the Hopwood's styles. You would have to discuss the Hopwood's styles, that what exactly are the Hopwood's styles. So one of the style is basically the budget constrained style. The other style is the profit conscious style. And the third one of them is the non-accounting style. Now let's talk about each one of them, that what exactly happens with them. So with respect to budget constrained style, what do you want? You actually encourage employees to follow budgets, meet budgets, no innovations needed, no investments admired, staff is rewarded upon meeting budgets. Now, this is ideally suited for cost leadership, as cost is the key and you would like to reduce the cost to the maximum possible extent. So that's basically what is going to happen with respect to the budget constrained styles. We talk about the profit conscious styles, and let's just see that what's going to happen in the profit conscious style. The focus is on long-term profit. The profit usually requires higher sales prices. Staff is rewarded for generating more and more profits. It is suited for differentiation, as the focus under differentiation is lower volume and higher margin as opposed to is lower volume and higher margin as opposed to the cost leadership, where the major focus is on higher volume and low margin. Then there is this non-accounting. Management's focus is not on finance. Management is more inclined towards management is more inclined towards non-financial performance of the employees, innovation, customer satisfaction, brand recognition are all the preferred things from the management's perspective. You get my point? So basically, you don't focus on it. Now, this approach is also suited for the differentiation strategy, where focus is upon producing unique products and services. Now, so that was basically one of the things that was needed. I've just written down bullet pointers. You know it in the examination. You won't be writing down the bullet pointers. You would be writing down detailed explanation, short paragraph. So it says the CEO would like brief outline on evaluating divisional management performance and how these fit to Proteus strategies. The CEO requires you to evaluate this current approach to use budget information at Ruard and to give justified recommendation for what you believe is the best approach to the use of budget information at each of the divisions. Now see, he requires you to evaluate this current approach. What's the current approach? Again, we just need to see that what is the current approach to the budget. Okay, here the current approach to use the budgeted information and give justified recommendation as to how to use the budgeted information at each of the divisions. Now, um, so what happens is that the divisions is one of them is office cleaning, one of them is the industry cleaning, and the third one of them is waste disposal. So what happens is that there is competition, price sensitive industry, focus is upon cost leadership, suited management style would be budget constraint, as it will encourage staff to save cost and hence allow entity to charge competitive prices. That's one thing that's going to happen. Industry cleaning is differentiation. An industry which requires expertise, market penetration already done, suitable approach would be suitable approach would be profit conscious style. Try generating more and more profits from the work requiring expertise and an area where entity has competitive advantage. Then when we talk about the waste disposal, what's going to happen with respect to waste disposal? With respect to waste disposal, innovations needed, new methods needed, new methods needed, suited approach could be both profit conscious and non-budgeting style. No single approach would be no single approach would be suited for all divisions, and a mixture of different policies when used will yield benefits. Right? Okay, so we are done with this specific part. Now there is the second requirement which is about the divisional performance. It says the CEO wants you to evaluate the three divisions performance using two divisional measures ROI and RI. You have been given an extract from these financial statement. As part of evaluation, you have to calculate on your assumptions in performing these calculations and in drawing assumptions. So using ROI and RI, you have to evaluate the division's performance. So now what I'm actually going to do is that I'm going to open up appendix 1 in front of you and see what to what extent you can actually do something out of it. I'll just zoom out of it. Yeah, can you take a screenshot of this page, please? Because you have to calculate it. I'll be giving you to calculate. Then can you take a screenshot of this also? Okay. Now proceed. You have got 5 minutes. Try to do ROI and RI. What's the requirement of the question? The requirement of ROI and RI, right? Okay. Take 5 minutes. Try to do it. Yeah, is it done? Have you been able to calculate it, please? Yeah, what's the update, please? Okay, now let's see. It says that extract from the rewards management accounts for the year ended 30th June 5 are as follows: the office, the industrial, and the disposal. The revenue is given, plus the divisional operating costs are given, the allocated head office management fees given, profit, then capital employed, then there are notes. A number of years ago, before disposal was established as separate division, the chief financial officer estimated the industrial's optimal cost of capital as 9%. WACC for Ruard is 11%. ROI for entities similar to Ruard is 15%. So what do we have to do? We have to use these. I'll just copy this whole onto the new spreadsheet. Okay. Now what are we gonna do? We're gonna say controllable profit is gonna be what? Is gonna be 24, the profit before interest and tax, plus allocated head office cost. So this is the controllable profit going to be. The ROI is profit divided by capital employed. The RI is profit minus rate multiplied by capital employed. So if you talk about the ROI, the return on investment, it's gonna be 45 divided by 157. The return on investment is gonna be 45 minus bracket open. This capital employed at 157 multiplied by. Now what is the relevant rate? It tells us here that weighted average cost of capital for Ruard is 11%, ROI for similar. Yeah. What was the company's cost of capital? It was 9% for the whole company, industrial, and for the rest of the company, it's 11%. Right? So what actually happens is that this is what it is going to be. So these are the answers that you have.
So can I ask something here?
Yeah, sure. Please go ahead.
Yes, I can see there are two cost of capital. So I need clarity from you that should we use notional cost of capital or weighted average cost of capital? Because when I remember in EVA, I'm quite sure that we use weighted average cost of capital. So here in residual income, I want to be sure if we are using notional or weighted average cost of capital.
See, what actually happens is that the notional, you are confusing the word notional with nominal. Notional is assumed, is estimated. That's what notional actually means. Notional is assumed, notional is estimated. So basically what happens is that now there are two things. One of them is the total business's cost of capital. The other one of them is not the whole business's cost of capital, but the other one of them is basically the segment's cost of capital. So industrial segment had a different cost, and the waste segment was actually created out of the industrial segment. So ultimately what happens is that I'm assuming over here, because I'm going to write down in my assumptions also, I'm assuming that waste has the same cost of capital as the industrial. That's what my assumption is. Is that okay now?
Okay, yes, okay.
Right? Okay. Now, what was the requirement of the question? He said that you have been given extract from so and so, so and so. Want you to evaluate the three divisions performance using the two divisional performance indicator. So, what is the performance? Industrial, waste, office cleaning. Waste, industrial, and the office cleaning. Now, what next is there? See, try to understand something. We have the performance in front of us, the office industrial disposal. ROI for similar entities is 15%. I'm just going to write down the assumptions used. Controllable profit is used. That is the profit after excluding the effect of the, that is profit after excluding the effect of the head office allocated cost. It is assumed that the disposal division has the same notional cost as the industrial, and hence for the residual income calculation, the same discount rate, that is the same discount rate, that is 8% is to be used, whereas for the whole of entity, a higher rate is being used. Industry average ROI is 15%, whereas all the divisions have performed exceptionally well, with the office cleaning generating the highest ROI. The residual income incorporates the effect of the residual income. What it does is that it incorporates the effect of cost of finance, and since all the calculations are positive, this suggests that project of the divisions are generating profits over and above the cost of capital borne by them. Right? You get my point? So this is what it is actually going to be. And then you could just talk about the calculations and all that, and you know that the waste division or the disposal division is the poorly performing amongst the remaining, but is still better than what the market is. Right? So you're gonna write down these things, and I will specifically mention about the assumptions because they are gonna have an impact. Right? Okay. So we are done with this question, and I hope that you people actually do understand and do enjoy that how exactly would you be dealing such type of questions in the examination. Now, those of you who are part of the March 24 session, are you submitting the assignments to the assistant of myself? Are you getting the feedbacks? Are you submitting the assignments? Yeah, are you submitting the assignments, please? Okay, lovely. And are you getting the feedbacks? Is it helpful? Okay, lovely. So basically, thank you, Brian, for the feedback. Okay, lovely, Edwin. So this is glad to see that you people are submitting the assignments also and then getting the feedbacks. So I think we're just gonna keep it till here, and we'll meet up inshallah in the next class, which is day after tomorrow, and we're gonna take things forward from them. Yeah, yeah, Christine, please go ahead.
All right, the allocated head office management fees, I see where you added that back. Could you just explain to me why?
Okay.
To me, what I'm interpreting it to be is that, it's
Are you
already.
talking about RI, residual income, right?
No, in the controllable profit, you have 45.
Okay, yes,
Right, so you added back the allocated head office fee,
yes,
which is the
yes,
21.
yes, 21. This is
Right,
21
I'm
plus
not
24.
understanding why.
Okay, you didn't understand why?
Right,
Okay, see, take these numbers.
right, so the 330 minus the 285. Yes, I'm saying, to me, it was already allocated. So they would have known which portion belongs to the 3 departments. So I'm thinking that the PBIT would be 24 instead of 45.
See, what happens is that it's a head office cost. It's being allocated
Right,
to the different division. It's not being incurred by any specific division. It's incurred by the head office and it is being spread out. You get my point? So if I if I remove this 21, I get a 45 profit.
right. So
So
you're
I'm saying,
saying that
yeah,
once it's the head office costs, it's not supposed to apportion to the different units,
to
right?
that, yeah, for the purposes of the calculation of, for the purposes of the calculation of this residual income
Controllable
and
profit.
yeah. Yeah.
Okay. All right. So would it be okay if you're not working with controllable profit and work it otherwise?
Oh yeah, but you just have to explain. You might lose 1 mark because 1 or 2 marks because the examiner actually is expecting you to go for controllable profit here.
Okay, all right. So once you get units, you ought to show the controllable profits, and head office would not be apportioned to those units.
No.
Okay, all right, thank you.
This is the recent examination paper, December 2023. Right? Okay. Lovely. So thank you very much, guys. Thank you for your time. See you inshallah day after tomorrow.